The bear call spread, we're going to show you with this 1 year chart of SPY, a very brief overview of the strategy, and then we'll get into the strategy throughout the course in greater detail. So as you can see from this chart here, SPY has been trading at somewhere between 187 and 213, and at the moment it's trading over here on the right hand side, as you can see, at about $203. So the bear call spread is a credit spread. You're getting paid up front to place this particular trade, and it can also be used as a high probability trade. So by the very name of the strategy, it's a bearish trade. You believe the share price of SPY is not going to go above a certain level. So let's imagine that you're looking at the chart here and you believe SPY is not going to go above 207. So what you would do in this scenario is sell the $207 call option. You're going to receive a premium in, and then at the same time you're going to buy the $209 call option, and that's going to cost you, that's going to eat into a bit of the premium you received. And the reason you do that is to reduce your risk. So if you're wrong and the share price does jump above 207, this $209 call option absolutely limits your risk in this strategy here. So what we want to happen, we want the share price of SPY to finish below $207 at expiry. That's what we want to happen. So if we were doing this, we might sell the 207 and then we might buy the 209. And we're going to receive a net credit for this particular transaction. That's our max profit. The max profit is the credit you received, and your maximum loss is the difference between the strike prices. So in this case, the difference between 207 and 209 is $2 minus the credit you received. So if you received a credit for 50 cents, for example, your maximum risk here would be 150. Now the reason this can be placed as a high probability trade, if you think about it, if the shares are trading at 203, they need to rise over $4 in order for you to start losing money in this transaction. So this is a higher probability trade.